land and building is sold, okay, there will be three impacts that you have to be aware of. 43 CA, 50 C, 56 to 10. Three impacts. 43 CA is seller, 50 C is also seller, 56 is buyer. 43 CA applies if the seller is holding it as stock, or I would say a business asset. 50 C would apply if the seller is holding it as a investment, or in other words a capital asset. 56 to 10 would apply if the buyer is buying it as a capital asset in the hands of the buyer. So if the buyer buys it as stock, means the buyer is a dealer in land, then 56 to 10 will not apply in the hands of the buyer. Now the provisions are very similar in 43 CA and 50 C. What is the provision? The provision is SDV or selling price, whichever is higher will have to be considered and offered for tax. Similarly, under 50 C, SDV or selling price, whichever is higher will have to be offered under CG as FVC. From the buyer's point of view, the difference between the SDV and the price paid, if it exceeds 50,000, the difference will be taxable. The question is, which SDV should you check? There could be two SDVs, date of agreement or date of registration. Now 50C, the SDV will be checked on the date of agreement. If advance received on or before the date of the agreement, in the three modes specified: account pay check, account pay draft, or ECS through a bank account. If all these three are satisfied, you will check the SDV on the date of the agreement. If not, on the date of the registration, the SDV you will check, and then you will compare with the selling price. Now this provision is exactly replicated in 56 to 10. The SDV check will be the same. Which SDV to check? The process will be similar to 50C. But with respect to 43CA, the third part of it will be different. The first condition same, advance must be received. Second condition same, on or before the date of the agreement. Third condition, otherwise than by way of cash. So if you see, the mode is the difference. This was because 43 CA was introduced slightly before this provision was added in 50C, and 56 to 10 was amended this year. So those have the modern modes. 43 CA still has the old modes. So it's actually a mistake with drafting. When they brought in 56 to 10, they used the three modes, but they forgot to amend it in 43 CA. 43 CA has been amended from AY 1920 to reflect the three modes. So now from next year, all three will be on par with respect to the modes. This year 50C 56 to 10 is on par, 43 CA is otherwise than by way of cash. This was the old mode. The new mode, modern mode, is three modes. So this provision will still apply to AY 1819. From AY 1920 onwards, all three modes in all three sections are on